Many around the world have just finished commemorating and celebrating the Easter holiday. It seems Exela Technologies has taken that celebration to the corporate level. Hi again everyone, I hope you're all doing really well. So Exela Technologies, ticker symbol XELA or Exela, has seemed to rise up out of nowhere this week and has now been on a 2-day streak that has allowed it to be up by 23% over the past 2 sessions. Interestingly, there is no clear catalyst behind the rise.
Send it to the freaking moon, idiot.
Exela Technologies, a global provider of information management solutions, reported poor financial results for Q4 2022 last week, with a revenue decline of 7.7% year over year and a net loss of $415.6 million, primarily due to a gross profit decline and goodwill impairment charges. While some sectors of the business demonstrated good growth, others saw losses, so from an operational perspective, they were also mixed. Inside last week's earnings data was something big that I initially missed. That was that Exela had actually sold over $20 million in stock via their existing shelf offering facility. This actually allowed their market cap to start registering higher. So they went from having a market cap that was sitting around the $7 million mark, which has now jumped back to $40 million. And when you factor in the growth from the past 2 sessions, that market cap is now sitting around the $50 million mark. So the size of the company on paper has actually swelled quite a lot in the past 2 weeks, basically 7xing. While these earnings or share selling don't spell good news for the company and its shareholders, perhaps they were not as bad as the market had expected, and as such, we are seeing a reaction in the share price accordingly. I personally have always thought that there is potential in Exela, but they have abysmal books that have been destroyed by mismanagement by the board over the years. Perhaps the market is seeing something better from the company at the moment. Beyond the earnings results, there is the story of the potential delisting of the company. This is a significant concern for both the company and its shareholders, as being delisted would mean that Exela's shares would no longer be traded on the NASDAQ, making them much harder to sell and likely leading to a sharp drop in their value when they start trading in over-the-counter format. The reason for the potential delisting is due to Exela's failure to comply with certain listing requirements. Specifically, the company has failed to maintain a minimum bid price of above $1 per share for an extended period of time before an automated delisting process was initiated over this year when the stock price fell below the 10 cents per share mark for an extended period of time. Exela was given a deadline of 7th of March 2023 to regain compliance with that requirement, which they have obviously failed to do so, as the share price is still sitting below the 5 cent mark. In addition to the potential delisting, Exela has also recently announced that it will be holding a special meeting of stockholders on May the 4th. The purpose of this meeting is to vote on 2 proposals. Firstly, the adoption of an amendment to Exela's certificate of incorporation to effect a reverse stock split, and the approval of 1 or more adjournments of the special meeting if necessary. Basically, if they can't get enough people to vote at the meeting, they want to be able to rehold the meeting, because obviously the stock split is something that needs to happen. The reverse stock split is a controversial move that would see the number of Exela's outstanding shares heavily reduced, with each share being worth more as a result. The purpose of this move is to boost the company's stock price and make it more attractive to investors. However, reverse stock splits are often seen as a sign of weakness and can cause existing shareholders to lose value. One significant consideration with the upcoming reverse stock split proposal is the potential impact it could have on shareholder value. A reverse stock split is a common tactic used by companies to increase the per share value of their stock, as it reduces the number of outstanding shares and concentrates the value into fewer shares. However, it's important to note that this does not necessarily mean the overall value of the company has increased, and some shareholders may see their overall value decrease if they own a small number of shares that will be combined in their stocks. Additionally, a reverse stock split can sometimes be viewed as a red flag to investors, as it can signal financial distress or a lack of confidence in the company's future prospects. This is very much what was seen last year when the company did undertake a reverse stock split as an earlier attempt to regain NASDAQ listing compliance. Ultimately, it will be up to individual investors to weigh the potential benefits and drawbacks of the reverse stock split proposal and decide how to vote accordingly at the upcoming special meeting. However, given the company's recent struggles and the potential impact of the reverse stock split on shareholder value, it's understandable that some investors may be hesitant to actually support the proposal, but that means they're probably going to get delisted. In conclusion, Exela Technologies is facing some significant challenges, including the possibility of being delisted from the NASDAQ stock exchange and controversial proposal of a reverse stock split. When you factor in another year of unimpressive financial results, it does not make a good narrative for the company. If the market is seeing the recent earnings data and cash raised via selling shares as a positive, perhaps that is what we are seeing flow through to the stock at the moment. It's anyone's guess, really. Anyway, my Hail Mary play in the company is only down by about 30% now, and I am still holding strong. While the earnings were mixed, I think the debt reduction plus the planned savings are going to help. Like I have said many times before, what is going to be key for the company operationally is being able to recapture some of the lost revenue they have experienced lately. Anyway, let me know your thoughts on Exela and its latest run at the moment. Do you think the earnings were better than expected, or is it another forgettable sign from this languishing company? Let me know your thoughts on the current rally at the moment. Is it likely to continue, or are we going to start seeing it move back down? Until next time, everyone, may the markets trade in your favor. Cheers.